Hi friends, so today I want to give a little educational talk on PMI, private mortgage insurance, specifically PMI when you're getting a regular conventional loan. So sometimes people say, I was told don't ever pay PMI. They kind of think PMI is a bad thing. I think PMI is a good thing because it allows people to purchase a home without putting down 20%. When PMI didn't exist, people had to put 20% down on a home. But now on a conventional loan, you can put down as little as 3%. Yes, you pay that monthly PMI fee, which protects the lender if you were to default on it. But PMI these days, it's very competitive. There's independent companies that sell the PMI that make it very affordable. But PMI will vary depending on what your credit score is, how much you're putting down, 3%, 5%, 10%. So the more you put down, the lower the PMI. The higher your credit score, the lower the PMI. There's other things like if there's two borrowers on a loan rather than just one, you typically pay a lower PMI rate. If you've owned a home before, you get a lower PMI rate, or some first-time home buyers in certain income levels get a lower PMI rate. So you see my point. It's so important that the lender you're talking to talks to you about PMI. A lot of times a lender, they only want to talk about an interest rate, or a buyer only wants to ask about an interest rate, but a PMI is a really critical part of that loan as well. I'm happy to have that conversation with anybody. If you have any questions, have a great day.